So what's up, guys? How are you doing? Uh, it's actually been a while since I've dropped any video breakdowns, right? So, and it's actually because I've been losing a lot of interest in dropping my chat works online and all. Because at the end of the day, there's a lot of free content out there, and you don't have any reason not to be profitable. But regardless, I decided to do this one, so I'll just explain some little things that would help you in a very very big way. Like I used to say, it's all simple stuff. If you like complicate trading for yourself, you like speak grammars, you are the one that know all those kind of stuff. But at the end of the day, it still goes back to liquidity, price, time, money. That's just it. Get stopped out, market move away from you. Get stopped out, market move away. So those are just the simple principles. Actually, I'm having a sleepless night again. No, not like sleepless night. I slept very early. I slept around, I think, 7 p.m. And that's not actually my usual thing. So I woke up not quite long. I woke up around 2:30. So I just felt like, let me come on this board and show you guys one or two things. At the end of this video, you guys will be able to understand basic money transfer, basic inducement, because I'm not really going to be going too deep. But trust me, when I say I'm not going to go too deep, just believe that I'm going to go very deep. But I'm not going to go very deep. So let's get to it. I want to give you guys a breakdown of this move that I caught. This one here. And hopefully this one here. And this one right here. This trade. So I'll give you guys breakdowns on them. Maybe not, but I'll give you guys for this one and this one. So let's get to it. Looking at this chart, when it comes to money transfer, I want you guys to understand one thing. When they say transferring of money, the basic understanding of that is when market move. Let's say market is moving in an uptrend, and when a uptrend is going consecutively, that means we have a break of structure here. Market transfer money from this point to this point, and it respectfully accepted the transfer. That is why it's able to make a new high, transfer from here to this one, right? And then again it goes again, transfer money to this guy, but it is until it showed the success of the transfer by creating a new high, that is when you can say it is a valid money transfer. So this is just the structural normal understanding of it, but I don't trade like this. I trade inducement and all. So I'll be using these simple basics to explain one or two things for you. And if you understand money transfer and how it works, you'll be able to understand mitigations and how market actually move price from one point to the other. You just have to understand that there's a lot of things going on. This is, at the end of the day, this is it. But it is not this picture perfect, it's not this textbook, it is always much more tricky. But once you understand the fractal nature of transfers and how transfer has been manipulated, you'll be able to get yourself inside any trade. Trust me, you will. Forget about the whole drama that has been happening on Twitter these days, bro. Trust me, at the end of the day, it is simple, and all you need is price actions and some knowledge about liquidity. Not to a pro level, actually. You can just get simple knowledge. Once you make money, that's actually what matters. It is not about who knows how to do it the best, and it's not about who make the best. It's all about the kind of life you live in. It's all about the comfortable life you are living. Fuck how much you make. So far you are not begging from anyone, then you are fine. I don't pray to be the richest in the world. Trust me, that's what delusional if I tell you that's what I pray for. But I pray to be comfortable, and I pray to be able to like it, and I buy it. I pray to be able to like something and immediately I'm able to afford it. Okay? So that's my dream, not to outsmart everybody in the world. I don't give a fuck about that. So now let's get to it. Now, using this basic principle, there's something we call complex pullbacks. There's something we call internal structures, right? And what is internal structures? Internal structures is when the market is moving in an uptrend, and let's say this is an uptrend. Now let's say money has been transferred from this guy to this guy, and then all of a sudden we have another one. I'm going to be very, very basics. Then after having that other one, you now have like stuff like this before they broke the structure. So all this right here, money transfer from here to here, transfer from here to here, successfully received, it broke structure. So everything here, it's what we call the internal structures. And internal structures are always being calculated after a break of structure has been made. The first pullback to it, if it did not get cleared, which is this pullback right here, everything above it is just what is an internal structures. So which means all this, when look, using this as an example now, you can see that we had this trap zone, whatsoever you want to call it, this flag, and then the market induced it. After taking it out, we have a clear break of structure. So all this break of structure now, you can see market did what? Give us an internal structure right here. So internal structures, don't get caught up in trying to trade from it. You can see that this is the first break of structure in this range. After having this break of structure, market pull back, then this guy become an inducement. So you can see it happens after a break of structure. So that break of structure is what I call the incomplete pullback, because if you measure from here to here, what kind of fib is this? Oh, how am I going to measure this thing? Okay, let me use that fib like that. I've not made the settings, that's why. From here to that, you can see that our 50% level is this green line right here, and the market didn't pull back to it. You can see this green line right here, that is our 50% level. You can see 0.5, right? So market didn't pull back to it. This makes this incomplete pullback, so it needs to be cleared. So after being cleared, what do you notice on the norms here? There's a lot of activities that might have gone on here that, trust me, I will have capitalized on it. But for this video's sake, I'm not really going to go too deep. Like looking at this trade, we had this trap. You can see that trap right there. Then the market actually induced the low, break structure, right? Then what? Mitigate. That's an entry for me. Another break of structure, inducement, mitigate. We move to the upside, then we have this trap, inducement, SMC liquidity, or whatever you call it, true break of structure, inducement, entry, lower time frame confirmation. We have a trap right here, break of structure, entry. Simple stuff, but that is not the purpose of this video. But I just showed you guys the breakdown right now. So now we have the internal range, liquidity. So market came back to clear it. Then the same bigger picture of this, the smaller picture happens here. So after having that smaller picture, we got an inducement at some point here that the market came to mitigate. So after the mitigation, what does that imply? That implies that market transfer money after this inducement right here, transfer money from here to here. So after the transfer of money, what happened next? You can see, like I said, once a break of structure has been made, that means it has successfully received the transfer. Then you have a break of structure right here. After having that break of structure, what is the next thing you should be having at the back of your mind? You should see that when a point successfully accepts a money transfer, that simply means that point is a valid swing point for the next potential move. Then looking at this trade, after analyzing this, we have this protected eye, which actually takes out this liquidity with broke structure. So which means market transfer money from here to here. It received it, it transferred from here again to here. It received it, you can see, from here to this low. It received it from there, then it transfer another one to this guy right here. But you can see, the only way I said they received it is they broke structure. They broke structure. This one too broke structure. But now that it is now here, as at this point, did they break structure? No. So which means it is not successfully received. So which means that failure of receive of that money transfer, which actually makes this market move to the upside, that simply tells you that there's a violation in price, there's a violation in order flow, there's a violation in money transfer. So that violation point is now your what? Is now your point of interest. So you can see we have a break of structure here with the same concept of internal range liquidity that I explained here. You can see we have the same thing here. So how do I know that it's an internal range liquidity? The same concept again, from this low to this high that caused the first pullback. This is our 50% retracement. It did not get there. That simply tell you that what? That this guy is an inducement. So if this guy is an inducement, what happened next? Are we going to be looking for my trade here? No, I am not, because fine, there's a rule that said the closest POI to liquidity is the point I will trade. But based on this price action, you can see that this is the point that the market ignores the money transfer because it refused to create a new low right here. So creating that new low, you can tell that this guy is now a violation point because it violated the rules of order flow or whatever you want to call it. So now that means this guy a point of interest. Trust me, I got this trade directly even without a lower time frame confirmation because I know what I'm looking for and I know where to look for it, but I'm not going to show you guys that. Even breaking down this, I've already said a lot. Yes, I've said a lot. Because the concept of this range liquidity, I don't know how your mentor has actually explained it to you, but this is it. It's not as hard as you think. But trust me, if I tell you something, I am very, very flexible in this market. So I know what to do and how to do it over and over again. So this point is a range liquidity. You, as a beginner, I would advise you not to trade it, but me, I will trade it because I know what to do, and that's why I broke it down for you here. The same thing here. I know exactly what to do to get in on trades. So if you have not up to that level, just stay calm and wait for big expansions. So now this is my POI right here, because we've transferred money after locking liquidity here, transfer money to here, then we're expecting a new high. So what did I do? After market getting to my POI, which is as at this point, what am I anticipating? I'm anticipating because this guy has already received the transfer from here. So I'm expecting this guy to transfer to this, and I'm expecting it to what? Successfully receive it by creating a new high. So what am I going to do? After market getting to my POI, let me use the replay tool. The funny thing is my student will probably be angry for the fact that I dropped this video for you guys, but I'm sorry guys, it's been a while I showed them stuff, so they shouldn't really vex for us. Let them just take this little out of things. I'm really sorry guys, actually there's a lot of free content everywhere, but I don't really like to give too much. Okay, so my student, I'm really sorry, let's just give them a little. Okay, the thing is, they won't really take it seriously, but they don't know how important it is. So now let's go to 1 minute, and what do you expect? We have different types of liquidity. Once market gather our liquidity, this is just one of it out of other ones that I've actually taught my mentee. Once market take out your liquidity, you're expecting the what? The ABC rule: market break structure, pullback, come back, then this is one of it. The market come here and buy. This is just one of it. Or market come here, high, low, high. The market break two structures. There's a reason why it needs to break two structures. This is not just breaking two structures. There has to be a rule that will happen somewhere around here. But I'm not going to tell you what the rule is. You can make your own research before I can validate the buy. So the market get to this point. Let me play the price. So playing the price, I have this thing should move faster. We don't have all day. Boom. So now looking at this price, what do we have? You can see based on the same thing that I explained the other time. Based on the other thing that I explained, you can see we had money transfer right here, money transfer right here, but this guy failed to create a new low, which means this guy did not receive the money transfer to the bearish side, so it broke structure, right? So breaking this structure, it makes this guy a POI for me. So making that guy a POI, you can see I would buy from here, put my stop loss right beneath this guy. That's like 6 pips stop loss. Then what will I do? I'll be targeting my all-time highs. But am I just going to just enter the trade and leave it to get to the all-time highs to actually complete the transfer that has been existing? Nah, I'm not going to do that. So that's where my trade zone rule comes in. I'm going to analyze the market opposite against my buyers. So saying I want to analyze against my buyers, you can see we have this trap. After this trap, we induce it, we transfer money, inducement, right to here, major inducement. There's a why this happened. So that major inducement we broke structure. So transfer money from here to this guy, broke two structures, they still violated it. So which means, like I said, internal structures from this high to this low. Is it up to 50% pullback? No, internal structures. So which means this point is going to be a trade zone for me in the future. This is just the basics. But me as a person, my trade zone is actually here. If you check the chart, this is where I choose, and there's a reason why I choose it. But no, to your own understanding, to what I just explained in a simple way, this is it. So which means anytime I can get to this point, I would rather do two things: take partials and edge. Right? I can take partials and let it run, or I will not take partials, I will just edge, which means once it gets here, I will sell. I will sell to some point with a bigger lot size than even the buy, right? So I'll get to a certain point, I'll close the wholesale, then I'll let my buy run, because I know it's just a short time trade. It's a threat, because order flow transfer to this inducement, it needs to have its own transfer too. So having said that, I would let's play the price keep doing whatever I wants to do, then move quick, bro. Then we got in on the buy successfully, then the market start moving aggressively to the upside. You can see that after moving, go to our trade zone, you have a very, very sharp. This point is not even where the market will reverse from, but like I said, this is the trade zone for basic. This is the internal liquidity for basic understanding, but this is mine right here. I'm not going to explain why, because that means I'll be going too far, right? This is not just back testing. You will see it on the chart. So now playing the price, you can see it triggered my stuff. So as at that point, I edged from here. So once I edge from here like that, then my market will get to a point, I get to my TP of the sell, I let the buy run. Depends on how I feel about the trade. So the market keep moving, boom, boom, boom. And we continue the buy to the upside. Isn't the basic understanding? I think I said I would break down this guy. So we keep moving until we got to our final TP. So that is that about that for the particular setup. And let me try to see if I can quickly break this down. So this particular trade is still the same thing, but this is very, very more tricky. We took out inducement at this guy. Then we shift character, then we enter from here. That's two basics though, but that's the entry right there. I'm not going to be going too deep. I don't know how to talk less. I know how to talk a lot. So I'll probably just give you guys what I'm not supposed to give you guys. So inducement, change of character, entry, basic. Okay, so now that is that about that. So that is just how this thing goes, and now I'm able to capitalize on it. The funny thing is I actually entered with I think how many lot size? I think I entered with 20 lot size on this particular trade. Yep, I think that's what I did. I entered with 20 lot size. Where's the trade? Yep, I think I entered with 20 lot size. Okay, I can't even click it. I'm trying to show the trade if I have it here. But that's that about that. That's that about that. So thank you guys. I hope you watch the video over and over and over and over again for your own good. It's not by force. I hope you watch it, and